Earnings season in technology can bring all kinds of beautiful stories. Did you have a tax dispute with Brazil on your bingo card for what Netflix would tell us about the world of streaming?
I did not have Brazil tax issues on my bingo card, but I think the Netflix earnings were actually pretty decent. We forget that Netflix has actually come a long way from a free cash flow growth perspective. They were only generating about $1.6 billion about 2.5 years ago, and now they're generating close to $8 billion in free cash flow, and that's slated to go to $11 billion. So we'd like to focus on that metric versus the Brazilian tax issue.
Okay, team, let's leave the shares up. Ayako, we're showing shares on the screen. The stock's down almost 10%, on track for its biggest drop since April of 2022. What was the big picture story about the health of streamers and streaming here, and where Netflix sits in that landscape?
Sure. I think from a consumer standpoint, Netflix is one of those go-to programs that consumers are going to continue to go to. I think that, for Netflix, the content you mentioned has been very solid. And even if the macro environment is a little shaky out there, I think Netflix will continue to see subscriber growth. And that's what we'd like to see over time.
Ayako, let's get back to our top story today. Overnight, Rachel, Davey, and I broke the story that Google is in early talks with Anthropic for a cloud computing deal, capacity in the high tens of billions of dollars. When we broke that story, Alphabet shares really jumped in after market. They've given up some of that gain in the market open this morning. And Amazon fell. Wealth Enhancement has some exposure, particularly to Alphabet. What is your reaction to that reporting, and what does it signal to you for those companies involved?
I think in general, the sort of clue to me is just that the infrastructure build out is still in its early phases, right? We've heard so many announcements over the last several months, and yet here we are with another one. And just when you thought you weren't going to get another announcement related to AI infrastructure build outs, here we are with Google and Anthropic. I think that the race is clearly on, and we'll have to see who's really going to win. But the build-out is sort of still in its early phases.
The cloud computing market, as we've always understood it and talked about it, is AWS, #1 player, Google Cloud, #3 player. In the specifics of this story, both of those companies, as it relates to AI workloads, have some questions to answer here, right? So Amazon is also a significant investor in Anthropic. Our reporting says that Anthropic wants to use TPUs. What are you learning about the competitive nature of Alphabet's cloud offering or Google's cloud offering versus Amazon's in the AI domain?
Sure. So I think we have to really dig into this in terms of, what are the TPUs offering in terms of optimizing workflows that GPUs aren't, and how is this better suited for, Google's sort of overall workflow, and how they're going to be using AI through Gmail and Google Maps and a lot of their applications that they have in-house. And then how does that fit related to Amazon and how, some of the algorithms are working for Amazon's, suggestions for retail as well as advertising. I think there's still a lot to dig into here in terms of how this is all going to work out.
Texas Instruments is worth lingering on, I think. Sometimes it's seen as almost like a crystal ball of what all kinds of end markets around the world will do coming up next because of how many analog chips go into all kinds of things. What was your read on the print there?
Sure. So I think in general, as Ian said, the overall quarter and earnings were actually pretty decent, 14% growth. But I think the read-through into industrial markets, into automotive, into some of the consumer electronics that are more basic really shows that we're not in a macro environment that is growing gangbusters. So outside of all of the AI investments that we're seeing in the economy, we're not seeing that sort of economic growth take off as much as I think people had hoped for.
We're in it. This is it. Technology earnings season. My Super Bowl. I don't know if it's your Super Bowl. What was it that we were expecting to hear, and what do you need to hear from the technology sector, specifically the Mag 7, I suppose, to keep the direction of travel that we have seen in equity markets?
Sure. So next week will be the big week for all of this, including a Fed meeting to cap it all off, too. So I think for us, we're always going to be looking at commentary around CapEx spend. I mean, this is what really set it off years ago, and we're going to continue to see whether or not that spend continues from the hyperscalers or whether or not they need to, take a little bit of a pause. But I think we're going to continue to see that spend. I mean, we're seeing announcements left and right, and so we'd like to kind of dig into that during earnings season.
Do you expect that tariffs specifically or any other Trump administration policy will play out on the calls or in the statements?
In the tech side, maybe a little bit, but I don't think it's going to be as prominent as some of the consumer names have talked about with tariffs and goods. I think it's going to be less of an issue. I think we've seen all of this talk about exporting that has had a little bit more of an impact, and the sort of tit for tat with China, that's probably going to be a little bit more of an impact. But overall, I really do think that investors are going to be focused on general CapEx spend, ROI around AI,
right,
and how that's playing out.